Welcome back, traders and investors. We have Ryan Mallory of SharePlanner today to give you some of insights on his trading and the markets. Ryan, how you doing today?
Doing great. Thank you for having me on your show.
Yeah, no, it's great to have you on. Before we get started, could you just give us a little bit of your educational background and your history in the markets?
Yeah, sure. I started trading when I was about 11 years old. Not as anything with skill or knowledge or anything, but simply because I had inherited a small amount of money, about $5,000 when I was 11 years old, and instead of using it for college like my siblings had to use theirs for, my father used it instead to introduce me to the stock market, and I pretty much followed his advice, and during the 90s everything was working well, so that money quickly evolved into about $30,000 by the time I went to college, and then you had the market crash in the 90s or in 2000 after the huge run up in the 90s, and I quickly learned that there was a side to the market that involved extreme loss, and so that was a big education to me, and a huge introduction for me in the stock market, and one that would later serve me very well, when 2008 came and the subsequent bounce in 2009. But so I started pretty young in the stock market, and then when I was in college, I sort of drifted away from it for a little bit, and then when I took a job in corporate America, I disliked my job quite a bit. So then I renewed my interest in the stock market and traded in part time for quite a while in corporate America, and then did well enough to where I could quit my job and trade full time. So, and that's
Okay.
then where SharePlanner came from.
Okay, so what do you primarily trade?
I trade equities, no ETFs really, but just straight equities, long and short.
And nothing in the options or futures markets.
No, I find the more that I dabble in those markets, the worse my returns are. So I stick with what I do the best at, and that is the equities.
Okay, yeah, you briefly mentioned that you had the nice run up in your portfolio, and then the market taught you a lesson. Did what was that lesson that you need to like learn how to play the short side, and are you able to play both sides of the markets?
Absolutely, I think that was one of the big things. But the other big lesson for me was just respecting risk in the markets. I think oftentimes we get caught up in how much money can I make in a trade, or how much can this stock go up, instead of really focusing on is how far can this stock drop on me before I'll realize it's time to get out. And so and that applies both to the long and to the short side as well. So that's one of the biggest lessons that I think traders of all levels of experience needs to keep in mind.
Okay. So have you developed like a core strategies and you just stick with those, or are you always trying to develop new strategies to adapt to the new different market conditions?
Yeah, I look at new trends in the markets as the markets mature. You start seeing new patterns that are developing, and you try to make adjustments accordingly. But my core approach to the market of keeping risk as tight as possible on every trade, somewhere in the realm of 1.5 to 3.5 to 4% on each and every trade, and not really deviating outside of that while maximizing the profits on those trades. That's really my focus on everything, and I use that with technical analysis on every one of my trades.
Okay, so you're day trader primarily, swing trader, or a little bit of both.
Swing trader. I mean, I don't think I make the best day trader, but I do quite well with the swing trading.
Okay, so tell us about Share Planner.
So yeah, this is a company I started about 8 years ago, and it the we have plenty of content on there every day that's being posted, but also my premium service, the Splash Zone, offers all my swing trades in real time text and email alerts. We have a very vibrant chat room with lots of other traders that are actually really good, and so you get all of that, and for a small monthly fee, and it seems like people really like it quite a bit, and it continues to grow each day.
Okay, and what's the cost of it?
$59.95 a month.
Okay, and who do you seem to attracted? Retail investors, or do you have any institutional clientele?
Retail primarily, and you don't see too many institutional, but um, they could be out there.
Okay, all right. So just from what I gather so far, speaking to you, you seem to be a pretty technical trader. Then, so you try and ignore the fundamentals, or where do they play a role in any of your trading?
No, the fundamentals don't play a huge role for me. I mean, if there's something out there, for instance, if this company's reporting earnings the next day, I'm not gonna swing trade that. Or if it's a biotech stock that I know there's a major FDA decision that's coming out sometime in the near future that could dramatically affect the stock, I'll pass on that. But as far as looking at PEs and balance sheets, I stay away from that. I'm purely technical.
Okay, so what type of charts do you prefer in time frames? Are you a bar chart, candlestick guy? What kind of charts do you like, and what time frames do you follow?
I do all candlesticks, and the time frames I use three different ones. I use the daily primarily. That's where my watch lists are created from, and where I'm looking for price patterns for where to put the stop losses and everything else. But then I use like the 5 minute candles, um, simply to like stage entry. So on those 5 minute charts, I'll put pivot points on those charts, and if I see a stock that I really want to get into, but it's gone through like the R3 pivot point already on the day, I'll probably stay away from that. Or if it's trading well outside of the upper Bollinger Band, I'll wait for like some kind of a pullback before I get in. So that's where like the 5 minute candles come into play. And then you have like the weekly, which I don't put a huge emphasis on, but oftentimes I'll flip to the weekly just to see if there's any other concerning price patterns that maybe doesn't show up on the daily.
How about that pivot? You use that pivot point formula, huh? With the R1, R2, and R3. That's something that's been around for years, and it seems like a lot of traders you kind of use as an old standby.
Yeah, I do, and really I use it as a gauge to make sure that I'm not getting into a stock that's made a lot of its money already on the day and has limited upside, rather than I'll wait for it to pull back if it's just way out there in the R3 area or higher.
Right. So so you'll use that, and then probably also the average daily range. When it incorporates with that, it was something that would give you a little bit of an inclination when something's overextended. Do you trade after hours or in the pre-market?
No, I don't. I've been able to do everything during normal market hours. Everything's simple with my trading strategy. I keep only 10 positions max in my portfolio, and rarely do I even reach 10 positions. And I keep it pretty simple. I mean, 10% position sizes all in on a trade and all out on a trade. I don't do any scaling in or scaling out.
Okay. So what do you got? What do you got on the radar for today?
So I got a few stocks that I'm looking at. One of them is FFIV. I got stopped out of this one actually yesterday. I guess I shouldn't say stopped out. I closed it out before I got stopped out, simply because the stock wasn't behaving like I wanted it to, and the market wasn't really behaving like we were wanting it to either from a bullish standpoint. And but if the market can sort of get back on the track today, I think FFIV has some nice consolidation that if it can break through some of these recent highs, and out of that consolidation pattern, I think that'll offer a great risk reward right there. You have GES, which is I like the stock a lot, but the only problem with it, I would have probably been in it yesterday, but there's just not a lot of volume popping up in it over the last 3 days. It's just been very low, quite honestly. So if there can get a little bit more pickup in the volume side, I think that will make a great trade. And then you got Goodyear Tire GT, which is consolidating nicely as well. And a lot of times I use like the consolidation to be able to determine my risk on the trade, because if the stock breaks out and then it breaks and let's say it's a bad trade and it breaks below that consolidation that you were previously trading in, and you have a clear area of where you need to get out because the risk is clearly not in your favor anymore. So the consolidation is oftentimes what I'm looking for, and for a breakout of that consolidation. And
Right.
so in GT,
Yeah.
you have a nice bull flag there that can keep the risk very tight, maybe like 2 or 3% on the trade. So if you're wrong, you're going to know it pretty quickly. While the upside has about 8 or 9% to it, so you're making like a 3-to-1 risk or reward to risk on that trade.
Right. Okay. So what do you think's the most common mistake the new traders make?
Oh well, I think what a lot of traders will really stumble themselves up on is focusing on the dollar amount that they are making on a trade. Um, they start personalizing profits, and they start personalizing losses. So if they're up $500 or $600 on a trade, they start thinking about how can I keep this $500 or $600 rather than just following what the charts are showing them, and instead of looking at the price action, they'll start looking at the upticks or downticks and the dollar value of that trade. And what happens is they start like personalizing that. They'll start relating, $500 to a new iPad for Junior, or they'll start, thinking about a mortgage payment that they could make with that money, instead of just focusing entirely on the risk and the reward aspect of the trade. So I always tell people, don't really look at the dollar amounts on the trade. Follow the percentages and how much you're risking, and the risk reward and the price action, but try to stay away from the dollar amount in terms of profit, how much you're making or losing on a trade.
Take a look here at a couple symbols here that our traders are active in. You got your charts in front of you?
Yeah.
Okay. We get some questions here on plug, PLUG here. Trading up here in the pre-market, broke above the $4 level. I see a high in the pre-market of 465, and I see a recent high this year at 490. Gap and go on this one.
Yeah. This is a stock that I've heard a lot of chatter about of late, and a lot of people are trading it. The thing you have to ask yourself, and it goes back to the risk and the reward, is how much. This is obviously going to be a volatile stock today, just as it's been recently. But when you're going to trade this thing, I mean, how much are you willing to risk in order to be right? I mean, I think on a stock like this, you got to probably risk, a stop loss of somewhere between 7 to 8%, just to make sure you're not erroneously stopped out from just, coming back and forth in the stock. So that kind of a trade there, it can be very difficult to make, just simply trying to control the risk aspect of it. So, and then you also have to look at too is how much of the easy money has already been made on the trade. And you look at this stock that's made a run from like 50, 60 cents all the way up to 450, and you're starting to get to a point where there could be a lot of profit takers that swarm in and really bust the chops of the bulls.
Right. Okay. So, and do you put a lot of emphasis on the opening price? Where stocks open and that trading within the first 5 minutes, or do you kind of use a little bit, have other little tricks that you use off the open?
I stay away from the opening price, quite honestly, in terms of trading in the first 30 minutes. I usually will never do. I'll take losses in the first 30 minutes, if my stops are triggered, but I really try to stay away from it just because it's just so unpredictable about A, where the market's going to go, and B, where the stocks are ultimately going to go as well. So, I try to let the market settle in a little bit and try to get a little bit better direction out of both the market and the stocks before really trading on the day.
Okay. And, just some final tips for traders.
Yeah, always. I know I probably sound redundant, but I truly believe that if you respect the risk on a trade, if you respect and you set in place before you ever get in the trade where you're going to get out at, and you follow your risk plans, that the profits will take care of themselves. 90% of trading has everything to do with how the person is managing the trade. And some people will probably disagree with this. I think the actual stock that you're trading in has far less to do than the stock that you're actually, or than the manner in which you're trading it.
Okay, and just a question popping up here before we let you go from DJ. Retail stocks have had a bad year so far, and now that the polar vortex is over, I hope it's over there, DJ. What do you think about the turnaround in something like Target? You know, after it's been beat down, or do you have any other retail stocks that you should be eyeing? And DJ, if you picked up your Barron's on Saturday, there's a real good article by a former Army meteorologist that talks about this exact thing. So I hope you got your Barron's. It was a good article on there. But anyways, Ryan, what are you looking at on Target here? And is there any other retailers you think that might rally here once the polar vortex is over?
Yeah, Target. I mean, they reported earnings today, and they seem like they're popping a little bit off of their earnings. Obviously, with the whole data breach that spooked traders quite a bit and led to the subsequent sell-off. I think there is a possible basing pattern that's going on with Target. I mean, you have this range between 50, 55-ish all the way up to almost 58, to where if it can actually break out and push above 58, there's a legitimate chance that you could trade this stock with an entry around 58, put a stop loss maybe at 55.95, and only have about a less than a 4% stop loss, and see a upward move possibly up to $62, $63 before you really hit any major resistance, and that gives you a 2-to-1 reward to risk ratio on that trade. But so that's how I would probably trade Target if you're looking for a play right there. Other retailers, I mentioned Guess, GES earlier. Some of your bigger retailers like Walmart, I really don't see any play in Walmart right now, but Target has a decent trading opportunity there. You just have to be patient enough to see, okay, it can't cross 58, and then trade it, and then once it does cross 58, you got to make sure you put that stop loss in around 56 or 55.95 or so.
Okay, Harlan, I really like you're very consistent, with, using stops and risk reward ratios. I think that's what traders need to pay attention to in these volatile markets. We really appreciate you coming on the show today, Ryan, and we hope you have a great trading day, and certainly like to have you on back again.
I appreciate you having me.
Okay, Ryan, thank you.
Thank you.